Let's now look at the sales and collection process. And when we think about the sales and collection, and you're going to hear this referred to in a number of different terms, sometimes it's just called the sales cycle or the revenue cycle. Basically, what we're doing is we're converting our product, whether it's goods, services, or a combination of both, into cash. Selling what we have to offer, collecting the cash for it. Now, if you think back to your previous coursework, you'll recognize we've got a sales event. And that sales event could be for cash. It could be for credit. So that means we may have a transaction that is accounts receivable for credit for $110. The sales itself for $100, and then sales tax payable for $10. All right. Or if we collect the cash right away, then we have cash $220, sales $200, and sales tax payable of $20. Now, in the case of our receivables example, well, then we're going to manage our receivables, keep track of when they're owed, and eventually we'll get paid. Now, as part of the sale, we may also have to recognize our cost of goods sold and deplete our inventory. So cost of goods sold, let's say we've got a 20% margin. So for our top example, cost of goods sold is 60, and our inventory would be credited 60. And then eventually we get paid the cash of 110 and credit accounts receivable. So the three basic transactions are going to be the same. We've got the sales event itself, and then if we've got a cash sale, the payment takes place simultaneously with the sales event. Otherwise, we deal with the receivable and then eventually receive the payment. Now, how do we visualize that as a business process activity model and then convert that into a data UML class model that will work for an accounting system that deals with sales activity? And we'll cover that next.